on to the markets now. The NSE All-Share Index declined by 0.59% and closed at 33,334.27 points. Now, this represents a year-to-date performance of 18.72%. The total value traded decreased 32.83% to 3.5 billion naira, and total volume traded decreased 8.44% to 352.15. Well, now for a look at factors behind market movement today and some of the corporate activities on the stock exchange. I'm joined by Abiola Rasaq, a team lead research unit at UBA Capital. Well, thank you so much for joining us, Abiola. Now, Abiola, a decline of 0.59% in the all-share index. What do you read into this?
For us, this is just a justification of our earlier view that the market is actually at a tipping point. And what we mean by that is the fact that the market is at equilibrium at this level. And what we most likely see is a downside to the NSE All-Share Index, particularly from technical perspective. When you also look at it from the fundamental perspective, you also agree with me that the market is actually reaching valuation at the earnings multiple of around 13.5. This is largely in line with the emerging market trading multiples. And beyond that, we should also appreciate the fact that the banking industry currently now is going through what I see to be a sentimental sell-off, largely on the back of the headwinds that we see for the banking industry earnings. And of course, the consumer goods sector is reaching valuation, so we'll most likely continue to see haircuts on the consumer goods name, the likes of Nigerian and Nestle, which in our view are currently reaching valuation. Right
now, we see some results from the banking and consumer space. Well, let's start with Skybank's full-year result. Now, the company reported an 850% rise in full-year earnings per share to 95 kobo. What's the market sentiment on these numbers?
Market sentiment seems to be muted, but I personally would like to talk from a broader perspective on the Skybank numbers as against growth numbers, and that's largely because the growth numbers are actually distorted. I say they are distorted because when you look at the full year 2011, which of course is the base we're comparing the 2012 figures to, they are actually restated IFRS numbers. For instance, on the PAT line, last year, for instance, the NGAP PAT was around 5.3 billion. This year, the IFRS PAT is actually around 1.2 billion naira. So when you look at the growth numbers, you need to factor in the impact of the IFRS transition into those growth numbers. And for me, you would also want to see what's the quarter-on-quarter performance, particularly in Q4. If you do look at the numbers very well, you will notice that the provisions line actually increased significantly from about 2.9 billion naira in Q3 to about 13.1 billion naira in Q4, meaning that in Q4 alone, the bank has actually made a provision of around 10.9 billion. And that's why I'm more interested in discussing the asset quality of that bank and the volatility in earnings as against growth.
Well, staying with the financial stocks, looking at the banking space in general, last week we saw some profit taking from financial stock sector. Now, what's the sentiment like right now for that space?
For the consumer goods sector, like I mentioned earlier, they're actually reaching valuation. For the likes of PZ, for instance, which actually grew its bottom line significantly, I must say that's largely on the back of the impact of the Wilma plant that has been completed. Remember very well, they had a JV with Wilma to actually build an edible oil plant in Nigeria, which of course this is actually going to spur the launch of another food product, food ingredient product by PZ sometimes in June. But beginning to see the impact of this Wilma JV having completed that plant in top and bottom lines. And more importantly, again, we also have to appreciate the fact that the white goods segment of PZ business, which of course was pressured in 2011, is beginning to regain momentum. In 2012, banks actually reinitiated consumer lending, and of course PZ has got some very, very good relationship with a few large cap banks, which of course is beginning to pay off in terms of distribution and of course in terms of overall supply of their products to their major distributors in the market.
Well, since you chose to talk about PZ, now they released pretty flat revenue for efficiency, but efficiency rather in cost. Now, how's that company news affecting the sector right now? I mean, we saw consumer stocks like Nestle, Cadbury, and Unilever all closing down today.
I think the impact of PZ is actually muted. Like I mentioned earlier, the stock actually gained just around 0.52% today on the release of the numbers. Yes, you are correct that the top line actually was almost flat year on year. But I think the important thing we must note here is actually the fact that consumer income was actually pressured in 2012. Don't forget the fact that that was the year when we had the reduction in subsidy on fuel, particularly PMS, and of course, on the back of that, consumer actually saw a pressure on their wallet. And on the back of that, you also see banks' aversion to consumer lending. As we continue to see interest again for the banks in consumer lending, we will most likely see better performance from PZ, particularly as the impact of the JV between Wilma and PZ, which of course the plant has been completed to produce edible oil. As we begin to see the impact of that and new product launch that we expect in June, PZ again would begin to see growth numbers in 2013 and beyond.
All right, then well, now we have seen consistent volume trading on the NSE over the past few days. I mean, like over 300 million daily. Do you think this can be sustained?
For us, we actually don't want to focus on the volumes because the value of transaction is more important for us, particularly that these small cap stocks are beginning to see more and more interest. For instance, if you look at the volumes that are traded today, it's largely dominated by the small cap counters. And that's why we are more interested in the value of transaction, which of course is currently on average of around 4.7 billion naira, which I think is sustainable going into 2013, of course, Q2 and Q3.